Hi everyone, welcome to FinBytes. Today we will be checking on fundamentals of most trawled stock in the social media. By now, you would have guessed the stock's name. Yes, it's ITC. Even though the company is delivering good results, the stock price isn't going up. Let's check on the fundamentals of the company and then analyze what would be the possible reason for stagnation in the stock price. Before investing in any financial product, one should understand the product completely. If one doesn't understand the product, don't invest in such products. The reason for telling this is, in case of volatility or any underperformance of the stock or asset, you won't be having a clear idea on what to do with it, whether to add more or exit the position completely. To add confidence to your investments, you should have a clear understanding of the product. With this, let's take a look on ITC and what do they do. ITC was established in 1910. It is the largest cigarette manufacturer and seller in the country. ITC operates majorly in 5 business segments at present. That is FMCG cigarettes, FMCG others, hotels, paper boards, paper and packaging, and agribusiness. One more segment which is gaining traction is ITC Infotech. Coming to market share of ITC in cigarettes is around 84.27%. In tobacco exports, they have 43%. As far as notebooks are concerned, they have a market share of 25% and they operate under the famous brand called Classmate, where at least once we would have used this product. In instant noodles segment, they have a market share of 23% and they operate under a brand name called Yippee Noodles. They also have 9% market share in fruit juice segment and some of the famous brands under them are Be Natural. One more important point to be noted here is ITC is a professionally managed company, meaning they are run by the professionals who are also an employee of the company, not the owner. These professionals may or may not have a significant stake in the company. Few of the characteristics of a professionally managed companies are: the professionals are in their position as chairman or CEO only as long as they are able to complete their responsibilities. These professional managers can easily be fired by the board of directors if they do not meet the required company's target. These professionals focus on performance and consistency. The biggest disadvantage of professional management is that they can readily leave the company for a better pay or prerequisites offered by any other company. Coming to the product-wise revenue mix, FMCG contributes major chunk of 64.3%. Next is the agribusiness contributing 17.7%. Paperboard, paper and packaging contributes 11.5%, hotel business contributes 1.5%, and other segment cumulatively contributes 4.6%. Coming to the operating profit breakup, FMCG segment contributes around 75.9%. In FMCG, specifically FMCG's cigarette business is the cash cow of ITC. Rest of the operating profit breakup can be seen in the chart. With this, I guess you have understood from where ITC is generating the profits. Let's take a look into their financials. The assets have been increasing, which is a positive sign. Also, cash and bank balance are good. Overall, ITC has a strong balance sheet. Coming to P&L statement, we can see that sales have been increasing consistently over a period of time, which is a good sign for the company. Net profits is of real importance for the shareholders as it is the profits after all the expenses and taxes. This also has been continuously increasing, but we can see a drop in 2021, which is obvious due to COVID. But if we check the TTM, that is trailing 12 months, last 1 year profit until December 2021, the net profits are almost in par with March 2020. Cash flow from operations are positive and increasing except 2021, which is again a positive sign. Going forward, the company will generate increasing positive cash flow from operations. Also, free cash flow is continuously increasing, which is again a positive sign for this company. The latest Q3 results was also good, where the gross revenue grew by 31.3% on year-on-year basis. EBITDA grew by 18.2% on a year-on-year basis, and PAT grew by 12.7% on a year-on-year basis. Also, for this quarter, they have declared an interim dividend of 5.25 rupees per share. The ex-date for this is on Feb 14, so you should have the stock in your Demat account at least by 11th of Feb to receive the dividend. Let's look into some key ratios. Operational ratios. Under this, the first ratio we'll be looking into is the current ratio. It is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within less than 1 year. The current ratio is a bit higher for ITC when compared to industry average of 2. This means the management may not be using its asset efficiently. The next ratio is the cash conversion cycle. For ITC, cash conversion cycle has been improved. Cash conversion cycle means the time it takes for a company to convert its raw materials to finished products and produce cash flows from sales of these finished products. This metric takes into account the time needed to sell the inventory, the time required to collect the receivables, and the time the company is allowed to pay its bills without incurring any penalties. The third ratio is the debt to equity ratio. Company is debt free, which is a positive sign. The fourth ratio we'll be looking is the interest coverage ratio. It is used to determine how easily a company can pay interest on its outstanding debt. Higher the number, it's better for the company, and ITC's interest coverage ratio is excellent. Profitability ratios. Return on capital employed. ROCE is a financial ratio that shows if a company is doing a good job of generating profits from its capital. Over the period, it has decreased, but still 28.54% is a good ROCE figure. Because they cannot generate higher ROCE, they are distributing the profits back to the shareholders in the form of dividends. The next ratio is return on equity. ROE is the measure of company's net income divided by its shareholders' equity. Again, higher the better. Over the period, it has decreased, but still 21.81 is a good ROE figure. Because they cannot generate higher ROE, they are distributing the profits back to the shareholders in the form of dividends. The third ratio is earnings per share. EPS is calculated as company's profit divided by the outstanding shares of its common stock. The resulting number serves as an indicator of a company's profitability. The higher a company's EPS, the more profitable it is considered to be. EPS of ITC has been consistently increasing, which is a very good sign for its shareholders. Coming to valuations, in spite of increasing sales figure and profitability, the PE ratio of this stock has been decreased. Going forward, at some point of time, this stock has to re-rate itself. As of now, stock is at an attractive valuation when we compare it with sector PE, which is 44.65. In terms of price to book value, it looks attractive when compared with the sector PEV, which is 8.33. Also, dividend yield of 4.92% is very good when compared with the sector dividend yield, which is 1.89%. If we can obtain this stock at lower price as it was trading during the COVID time, which was around 150 levels, blindly allocate some portions in the stock. Going forward, such a drop in this stock would not be possible, but accumulating it in more quantities around 200 levels would be a good option. Disclaimer, I personally hold the stock from 170 levels, and going forward, I would keep on adding it at every dips. Also, when I receive dividends, I will reinvest it in purchasing the same stock. In future, the dividends generated from this company would be higher than the bank's FD rate. Since the company is growing and introducing new innovative products, this will also appreciate the stock price. Coming to the reason of stagnation in the stock price, I could find few reasons. Firstly, their major revenue chunk is from cigarette, and this is subjected to huge taxes from the government. This is a causing concern in the momentum of the stock price. To overcome this, company is developing the FMCG other product segments. If company could successfully diversify their profitability from various segments, ITC should trade at a valuation equal to other leading FMCG companies. Now ITC is operating under 5 different segments and they are trying to infuse money to weaker segments from the revenues generated by cigarettes. In future, if company plans to demerge their various business verticals, for sure this should generate a value unlocking to its shareholders. This is not a buying or selling recommendation. Please do your due diligence before investing. This is completely my personal view on ITC, and like any other investors, my prediction can go wrong in future. So try to have a diversified portfolio in case some of your stock underperform. Other stocks from various other sectors will cover up those losses. Comment your views on ITC and I would love to hear it from you. If you like the content, hit the like button. Do share this video with your friends and family to create a financial awareness about the capital markets. If you are visiting our channel for the first time, subscribe to our channel and press all notification bell button to not to miss any of our future videos. Thank you and have a great day. Bye.